I want to start with this episode with the questions that a lot of investors are quietly asking, but not many are saying out loud. Who is actually dumping Fetch.ai? Ladies and gentlemen, who is dumping Fetch.ai? Because when you look at the surface, something doesn't really add up. Something doesn't add up. You've got one of the most recognized AI infrastructure projects in crypto. Strong narrative, real development history, active ecosystem. Yet, the price action doesn't reflect the hype cycle we've seen around AI in the broader market. What is happening to AI? What is happening to Fetch.ai? And who is dumping Fetch? Let me break this down properly, not emotionally, not with hype, but structure, context, and real market logic. The uncomfortable truth about price and technology is here. One of the biggest mistakes that investors make in crypto is assuming that good technology will equal to rising price. Good technology will not automatically mean price to rise. This is not how it works. This is not how markets in crypto work. If that were true, most early blockchain projects would already be at insane valuations just based on innovation alone. But markets don't reward innovation instantly. Markets do not reward innovation instantly. They reward narrative timing. Markets reward liquidity cycles. They reward market rotation. They reward speculative demand. And most importantly, buyers stronger than sellers. Yes. Now let's bring this into the context of Fetch.ai. Fetch.ai is not a new project. Ladies and gentlemen, Fetch.ai is not a new project. It was founded by Humayun Sheikh, and it has been building since the early days of AI and blockchain experimentation. Before long, AI tokens became a trend. It went through multiple cycles. 2017, early formation and vision stage happened. In 2020, the mainnet and ecosystem expansion at Fetch.ai happened. Now, in between 2023 and 2024, the AI narrative explosion in crypto markets happened. So when people say Fetch.ai, why Fetch.ai is not pumping anymore, the answer is not simple manipulation or somebody dumping. But the answer is the market has moved on temporarily to a different narrative cycle. When you look at the price history, the all-time high, corrections, and emotional interpretation, this is something that people are not saying. This is something that people are seeing right now. The early accumulation levels around 0.03 to 0.3. The peak cycle reaching around $3 and more. The current retracement zone around $0.2 range. This has been varying by market conditions. Now, here's where most retail investors misinterpret everything. They look at it fell from $3.4 to $0.2. So definitely somebody must be dumping this coin. But they ignore the 3 phases that have happened. Every major crypto narrative has got the 3 phases. One phase is the accumulation phase, early believers and insiders. The second phase has always been the narrative explosion phase. Retail enters and then the hype cycles happen. And then there is the revaluation phase. The market cools down. Then liquidity exists. Fetch.ai already went through these 2 phases during the AI hype wave. Now, I'm of a belief that Fetch.ai is in phase 3. The market is cooling down, the liquidity is exiting. That does not mean that the project is dead. In my own thinking, I think it means that the speculative capital rotated elsewhere. The speculative capital is now rotating everywhere, elsewhere. But who is dumping Fetch.ai? I'm still asking myself. Let's be very honest and structured here. There is no single entity dumping Fetch.ai. That's what I think. What people call dumping is usually a combination of early investors taking profits. People who bought in early cycles naturally exit during hype phases. This is not manipulation, it is market structure. When you also look at market makers, they are balancing exposure. So liquidity providers continuously hedge positions. When volatility spikes, they reduce exposure. Now, retail exit liquidity after cycles. This is the biggest one now, because retail enters during a narrative peaks, what we can call AI hype, and when momentum slows, they exit fast. So instead of asking who is dumping, a more accurate question would be, why has buy pressure reduced compared to previous narrative cycles? And that brings us to something more important here. The AI narrative is not gone, but I'm of a belief that the AI narrative is simply rotating around. Now, here is a big misunderstanding right now, that the idea is that AI tokens are gone. People think that AI tokens are dead. AI tokens are gone, AI tokens are dead. But I think this is not true. What is happening is more like something that was supposed to happen. This is something that was supposed to happen. The market is rotating within AI itself. We are seeing 3 layers emerge right now. We are seeing infrastructure AI, that is the layer 1, coming up with Fetch.ai, ocean style systems. This is foundational AI and blockchain infrastructure. We also see layer 2 happening, AI agents and autonomous trading systems. This is where AI starts participating in market directly. We are already seeing early versions of AI agents that can trade, that can deploy strategies, that can interact with protocols, that can optimize yields autonomously. and also layer 3, where application level AI hype tokens. These are more speculative short cycle tokens that rise and fall quickly. So when capital rotates, it does not leave AI, but it rotates inside AI. And this is where timing matters. There are also people who think that actually RWAs is competing directly with AI. Now, you asked something very important. We are in a market embracing RWAs right now becoming a new shift. Is this affecting AI tokens? In my own perspective, I would think yes, in one way or the other. But this is not the way most people actually think. The crypto market always operates like this. Only one or two dominant narratives absorb liquidity at a time. Right now, RWAs, reward assets, are gaining institutional attention. Tokenization of real estate, bonds, equities is expanding. Traditional finance is integrating. It is all integrating right now. The integration is accelerating highly. So capital is rotating towards yield-backed assets. It is rotating towards real-world exposure, towards regulatory-friendly narratives. Meanwhile, AI narratives are more experimental. They are more volatile. They are less institutionally anchored for now. So what happens is that AI doesn't disappear, but it cools down temporarily. And in that cooling phase, prices retrace. This is something that most people are missing about Fetch.ai, in my own view. This is the part where we need to go deeper. Because Fetch.ai is not just any other AI token, but it is part of a broader attempt to build. And it is looking at building autonomous economic agents that operate on chain. This is a very different version. Vision. It is a very different vision compared to most AI tokens that are just here to create chatbots, to create API wrappers, to create AI-themed branding. Fetch.ai is closer to machine economies. It is closer to autonomous trading systems. It is closer to self-executing economic agents. And that matters in a long term. Because whether the price is $0.2 or $3 today, the core question is, will autonomous AI agents become real participants in financial systems? If yes, then infrastructure projects matter. If no, then most of this sector collapses. Most projects still go down in price. Let me explain something that is hard for many investors emotionally, because even strong projects go through 70 or 90% down drawdowns. They lose the narrative dominance temporarily. They get ignored during liquidity shifts. Why? Because crypto is not a linear growth market, but it is a cycle-driven liquidity rotation system. Price is not a reflection of value alone, but it is a reflection of attention, it is a reflection of liquidity, it is a reflection of timing, it is a reflection of sentiment. Not just fundamentals. No, not just fundamentals. So the real investor question should be asking, instead of why is Fetch.ai dumping, you should be asking, is AI still a long-term structural trend? Yes. Are autonomous agents still being developed? Yes, and accelerating. Has Fetch.ai lost its technical relevancy? No. Has capital rotated elsewhere temporarily? Yes. This is the real framework. People always panic in this phase. And this is where most investors get trapped, because they enter during hype, they enter during green candles, they enter during social media excitements, and they exit during silence, they exit during sideways price action, they exit during narrative fatigue. But what is exactly that is exactly when accumulation phases form. So what looks like dumping is often disinterest phase before the next cycle. Talking about the future, AI agents are no longer theoretical. They are already starting to execute trades. They are already here to manage liquidity strategies. They are already interacting with smart contracts. They are already optimizing DeFi positions. So this is important because it changes everything. If AI becomes an active participant in markets rather than just a tool, then blockchain and AI infrastructure becomes foundational. And projects like Fetch.ai sits directly in that intersection. So the uncomfortable reality that most investors will rotate too late, because this is the cycle pattern we always see. That narrative emerges, that is the AI that retail rushes in, price spike, smart money exists, narrative calls, retail loses interest, accumulation starts again. Most people re-enter at step 2 again, and that's why wealth distribution in crypto is still uneven. I'll end this that price drops are not always dumping events, that narrative rotation is normal in crypto cycles. AI is still early, not finished. RWAs and AI are competing for attention, not replacing each other. When you look at strong projects, they can underperform temporarily, but the timing matters more than conviction in short cycles. So crypto is not a straight line of innovation. It is a rotating map of attention. Today it's RWAs, tomorrow it may be AI agents again. And when the rotation happens, most people will not be positioned early. So the real question is not who is dumping Fetch AI, but the real question is who is quietly accumulating while everyone else is distracted by the next narrative. Because in the market, this is where the real cycles are won. Daniel Enhart is my name, and this is the Crypto Investor Podcast. Share this episode to Fetch AI holders and everybody around this project. Thank you so much. See you in the next episode.